Now it's true that we could go beyond the chop, right? Like, what about going to the B point? Of course it could go to the B point. Well, first off, I mentioned before that we could make a W before returning back to the M. It's true that it is an M. Where would, like, if we were going to rally back up there, it wouldn't be with a B point anymore, would it? Like, we would have to make one. So, what could it look like? Could it be a motion that's like this one? Because that was how we constructed our B point there. And like when I go M into W, like, is it not true that I could take these points right here and these points right here and kind of like bring them down, and they should be matching like generally, or else it would look funny, wouldn't it? Why does it let me do that? Green zone to red zone was added for, any motion. It's looking like it wants to get on top of the red though. The biggest risk of any low that we make is that it tries to do any sort of phase A to make a W. Like, isn't it true that that would make a W? And I'm like, well, yeah, it's phase A, but it's also a W. It's true. So we have to watch out for stuff like that. Blue lines are now in play as well.
Figure 261 is coming to the left.
Yeah. Yeah, that one there. That's interesting. It's right in the middle of an old range. The range that we used here, I mean, it was a green zone test earlier. That's about it. But now we have that 61. Blue line is something that I believe we're going to see. Does it feel like we've done the spike that we did on the top out of the bottom of the consolidation? Like, are we going to make that connection back with the blue line as vivid as the one that we had on the top of the spectrum? Cool thing about that 261 is that it has about 100 points, 90 points to get back to the 188. The connection of the blue line is like ending the spike, and anything we do beyond the blue line is a direct threat to the yellow and could be a direct threat to the entire trend in play at this time. This is still a major risk. So when I looked at this earlier, this was more like 90 points up here, Now the distance between our 261 to 188 is now 90 points. It now becomes so much more appropriate to make this movement, because that's the true distance between this level and this level. That is almost like making the same appropriate distance that we had up here to make the B point is what we have down here between these two levels. So we can see we've fully connected with the blue line and partially broken it with an intent to break back into the trend. And it could go up on a W. It's possible that we make an M, and then if it really wants to be kind, it could make a W like that. Lately we've been doing that. That would be a little bit more tough, right? But we know that when it comes down from this point, it will make that trend. And it's going to be about getting exposure again for the break of that trend if it so comes back to get you, which it may not. So like you're in a position where it can benefit you to play out. You're in a position where you know that it's not like you don't have to feel negative about it coming down there. It's just something it does all the time. We can get it. But a lot of people, when they put a lot of work in, they finally think that they're done, and then it comes back down. If it's unexpected, it comes with so much more emotional baggage. But if I just explain this, I'm like, well, isn't this something we do all the time? And did we come from an M? Like, could we do? Of course we could. So I'm like, this is that 90 points right now where, like, that's the bulk of, like, here, let me just show you this way. Like, if I take this all the way up here, you see that that's the distance that it took to make the B point up there. Exactly. So now if we're going to make an M that corresponds with a W, or vice versa, we may be similar. Now, it doesn't have to be, but if it was going to be perfect, well, this would be the time that you would think about hedging, to be fair, but you wouldn't, at the end of the day, like, that's the appropriate play if you do take an A point, is to hedge for this point, because at the end of the day it might pull back, but it's not something that you want to give your long trade up over. You know what I mean? Because you really want the B point. You want that full freaking 200 to 220 points. The problem, like the biggest problem, is that not drawing back deep enough means that we're going to have little weak B point fibs now. Watch. When I take the 261 and 188 from our so-called B point here, look at how they go up, they're going up, they're going up, they're going up, and this is all you get. So by the time we get to the B point up there, we'll have to pass the 261. If we made it properly, like you see how this one is nice and large like that, like that would be like doing this, coming down to those lows, making it nice and proper, making that properly. We did not do that. Therefore, there's going to be more, like, I don't know if they did this on purpose, but they've lined up the 61, 261, and the 188 in this general area that's not even the B point. So, you know what's so funny to me about that is if we go up to the 61, what's it used for? People try to short it, right? What is the 261? It's also short, right? People at the 188, they try to short it. Where do you think they're going to put their stops? Just above where they shorted it, right? They're going to be buy orders. So if you wanted to sell at the B point, what a better way to create buy orders than to have sellers come in at the 61, sellers come in at the 261, sellers come in at the 188, and they all put their buy orders on the B point.
Hey, sorry, can you repeat that? The last bit again?
Yeah, I'll just clip it. But I'll also try and repeat it. But at the end of the day, so we have a fib here. This fib, it's not deep, so it doesn't really give us a lot of movement to the top side. Where it gives us a 261 and 188 right now is at an area that lines up with this 61. And actually, it might be better if I just do it on this chart. I think.
61, right?
We have the 61 right there, yeah. And we have this little fib. Basically, people like to short. Oh yeah, sorry. We have the B point there. People like to short at the 261. People like to short at the 61. Like that 61 is used to like go up and then come down kind of thing. And the 188 is also used for short sellers. And when they short, their exit to that short trade is a buy order, which means their stops are likely to be placed above where they've shorted, which just above where they've shorted is the B point. And if their exits are buy orders, what a better way to convince people to be on the other end of your trade if you're trying to sell it to them. Like if you've bought down here and you want to sell it to somebody up here, you need sellers, right? Like or you need somebody to sell it to, which means these people that are buying are going to buy your shit from the bottom because you've convinced them to be sellers here, and they bail on their trades and become buyers at the profit target on a losing trade. And the funny thing is because it's exiting their position, they're out of the picture unless they make new trades. So is it set up for a squeeze? Yeah, it would seem so. It would seem like what we could do would be really perfect is give them this here. Like be like just a little bit below maybe. Be like, oh, you know, it's working. Oh shit, you know, better. It's working. And all they're really getting is 261 to 188. And that would be like 1, 2, 3, 4, and then 5. That would make a lot of sense, you know, from an institutional perspective. It does get rid of people before potential value. And I do see that there is potential value on the table. Whatever spike we do out of the bottom of the triangle could be bought out into a big run. But for the record, they've broken and broken and broken and broken. And not really ended the kind of choppy domain that we're in. The process continues to have this sort of treatment for those that want to be in on the plan. And that's like, you know, every time you go through one of these situations, it'll build a kind of resilience to selling out long-term trades at the beginning of long-term plans. Like, there's only so many times that you'll want to go through this when you see that it's not necessary. If you can see how painful it truly is to begin every single day, you know, from afresh rather than absolutely sticking to a long-term plan when there is one, this can be avoided. And if you go through this so many times, and it's like, what's crazy is you can know it's going to go up after, and this can just beat you up and take your money. And it's like, well, you might have been in from the bottom. You might have been in from before. And then you look back, it's like, geez, why do I choose to trade here when I was in and knew of the long-term value? I mean, like, what's the problem there? You know, because it needs to be addressed, right? You know what I mean? I mean, the first step is identifying it, and I mean, like, I will help do that. You know, like, that's one thing that I can do, and I don't fucking like doing it. You know, I don't like. I'm trying my best to teach you so that, you know, that I don't have to do that anymore. Like, what the heck?
Basically, like, I was able to buy down there. Now I have sellers to sell up to, and I still have contracts left over.
Yeah, I think you're doing it really well.
It's something I do, right?
Yeah, no, you're doing good. This is good. And it took persistence.
Like I am,
well, because it was tough to catch, yeah. And it was uncomfortable to catch. And even though you're doing it right now, like, it's still like you have PTSD from the fucking dump. Yeah. I know. But don't look to try and turn that into excitement too, because that's how that, you know, the roller coaster begins. Like, try to be neutral, meditate. You know, and at the end of the day, it is like 17 days from now, you're not going to have this feeling of what that did to you. And it's incredible that you can be doing it right and feel like that. And I've had many days like that as well. It's part of the job, and it turns you into a stone eventually. Like, you realize that feeling like anything is drawing you back, and that it's wasting time even thinking of it. And that you can distract yourself by thinking about what the market is doing at all times. And if you're rowing forward in your understanding, it makes it so much harder to feel worried about something when you're developing an understanding of what's going on. But I believe it. I speak from my heart. You know, it's not from like remembering. That's like the brutal, cold, hard truth of exactly what's within me. But we're doing what we should be doing, and I mean, it doesn't make it easier. I'm like, I can draw a line and show you exactly what's doing. I'm like, still hard, still frustrated. And I'm like, you know, what's funny is it reminds me of some of these very, very difficult video games. I wonder why we even play them when all we are is frustrated with them the entire time, because it's just so difficult to beat that everyone is just frustrated. And
okay, I agree, John.
See it painted in clearly on this chart. Obviously, the time that we're going to make that pullback, like, I don't really care about the time. That, well, I wasn't really considering the time, just rather whether or not we are going to do the move. You know, this chop here can happen at any given time. Obviously, we have to get there to chop there. If we get there after this, then that's fine. We can still chop there. I mean, everything that we do around this 61, I believe, turns into a squeeze. And I'll move this just back a little bit so that it doesn't obstruct the price. We can see that we are in that zone where people are sellers and we can squeeze them. We want to squeeze. Ultimately, if we chop here for a little bit, you know what it does? Is it allows all the 5-minute, 15-minute, and 30-minute traders that, you know, just check the chart every 10, 15 minutes or so. They're going to notice it's at the 61. They're going to notice. And we give everyone a chance to notice and to make their trade on the 61. Now, what do people do when they see a 61 like this? This is a bearish 61 designed to make bearish reversals off of it. People will sell and short into it. And that was the intention from the bottom, is that they would short here. We may entice them, you know. Maybe these big movements that we're getting that are sharp and snappy are catching their attention. Kind of like dangling the fishing line around in the water, you know, making it seem like it's getting attacked. So, like, I mean, do we feel like it's like that, kind of? Like, did we do that, or are we not there like that? It kind of did that. Is it true that we could put a trend in here, and put a trend in here, and have two trends? Now, the trend that we have from the bottom did break and hasn't retested. I can put it in only because we may retest it. Now, it's not like the other unbroken lines, but it is a line that could be responded to in the future. Now, think about it this way. If we get to the 261 or 61 before 1239, right, we will have interacted with that line. And I mean, could it get to here by then? I'm like, of course it could. Why not? I mean, if it does, we will have to deal with that line. So should it be removed? Well, I don't think so. I have reason to believe that that's not so bad. Like, obviously it could take longer. I don't really care about the specific time in this specific moment, but let's say if the first wave was anything like the fifth wave, when it does happen, could we do that now? And I'm like, well, when I draw in a 5-wave move, is there an incredible difference to what the first wave and the fifth wave do? Not really. Like, to the point that some math can be appreciated here too. Like, these two lows are similar to the two highs that we could be making when we make these points. To get full, you know, relationship, we can see that these 2 points right here are also something that we can connect and have a relationship with. It is as though this motion of making an N happens again to make our 5-wave move. Now, when we do this, we can see everything I just explained in here happening like so. Basically. Forgive my sketch, though. It's just a sketch. But it is the idea. It's a schematic. Like, I draw a schematic, just like how Wyckoff draws a schematic. This is a schematic. It's not even mine. This is Elliot Waves. Or Elliot whatever's. I don't know his last name. I used to. I don't even want to know it, though. It doesn't matter. I know it's Elliot, and that's all I need to know. And at the end of the day, the rest of it's general information. I can have access to it if I wanted to know it. I just don't need to, and it doesn't help me, so I really don't want to know. the end of the day, I find it very important to make sure that we're focused on the right things, and that is not the right thing to be focused on. But rather, if the name of the pattern described it, we could focus on the description more because it would inform you more about the pattern. Knowing about that gentleman is not going to help you. Like, you can say the work that he's done is worth reading, but knowing about him, like about his wife, about his name, about his kids, not going to help you at all. So I don't want to know about that. At the end of the day, and I find it very, very interesting to just keep on the things at hand. But here we are at the fourth wave low. Could we smash the 188-200 again with a movement that breaks through to the 261 and B point above, making a 5-wave move very clear across the screen, predicted well in advance as well. The W that we have at the bottom, as strange as it may be, is now a W and arguably rivaling the M that we came from. The M, and then the W, where the W right now has come back from the 188, but not all the way to the B point, insinuating that the bearish pattern that often has worked many times in the past is struggling to get to the point that plays it out. Now, when we do come back off of a W, it's true that when we get to this point, like up here, and it comes down, like we get to there, I mean, what is that? I mean, could it still do that? Of course it could. Are we out of the woods yet with that? Like, no, it could still be that. That's a risk of the moment. So we need to really get into the range above to avoid this from happening. And obviously, when we get into that range above, like cracking that green zone starts a real squeeze. Now, remember I had mentioned before we could make a cheeky head and shoulders here? Remember before I mentioned we could make a phase A here? You know that phase A looks like that, right? And through the point that we make a little head and shoulders, usually this point right here, it convinces a lot of people that it looks like a head and shoulders. Yet it could be part of phase A. Remember we were talking about how, where did I put it? I took it off, but whatever. At the end of the day, I mentioned this, I can find it in the video. The push up that starts with a circle here and then creates another Wyckoff, to make the M. You might think, oh, that was W to M, but no, it's actually phase A to phase A. Well, we're threatening to make phase A right now by showing people that this is a head and shoulders, and failing it, like even doing this, would be very, very, very aggressive. And what's funny is it turns into a 3 drives pattern when it does that, where in many cases, the distance from that high to this high can be very similar to the next one, and so on and so forth. Right now, it looks like everyone's being egged on with the head and shoulders. We're right in that area. It was I literally said we could make a head and shoulders there as well. It is the kind of experience that when you imagine what the institutions are having to do, right? Like they just did a really, really good play in their plan, right? It really worked out for them. Now they all have to be patient. They all have to make today happen. And, they have to switch off that drive, all of that to manage, a domain that they have to sit through the entirety of as well, managing it, trying to make it as difficult as possible. And, there's no end to it for them. So long as the people put pressure on them, then they have to work, and the people are so predictable and so on routine that lately they've been easy to avoid. And most of the value, as we've seen, some trends are, 75% of the trend can be built over a few days of overnight movement. And I don't know if those were test runs like the ones we were looking at before. Like let's just we'll take a look at it before we break out here in a second. It wasn't the 5 minutes, it was the daily. Oh yeah, by the way, like that's the daily now. And oh yeah. It has to show overnight gaps. So these are overnight gap days. We can see much of the trend continuation points have like large portions of gaps that show like overnight sessions, and leaps through overnight sessions can be a large portion of the movement. Like over here specifically, we can see that much of that movement was literally overnight sessions. Look at the four suckers in this one down here. Does it look like there was even ever a head and shoulders anymore? Like, remember when we were looking at that one? Like, what happened to them? I'm like, oh shit, doesn't even look like a 3 drives pattern either. They're just completely blown out. Nobody even remembers them. I'm like, on the other chart, we broke the trend. Let's have a look. Well, what do we look like here? Does it look like this motion? Because, in my opinion, we have completed the movement to the 61, and it has done the pullback. No, it didn't. It's not perfect, but it's definitely definitely perfect enough, I think. Is it not getting to where it should go? Did it make every pullback that it should? Even though that it was not at the time nor the place that would be the most appropriate, it still formed every wave that it should and achieved every target that it should. Now, of course, this is the point that it starts to squeeze. It's not the point that it ends. It's the point that it truly can begin something new. A lot of people are going to be taking trades thinking this is the beginning of a dump. And it's true that it's appropriate for a hedge trade in certain circumstances, but I would like to see it fail. There's the most value in us being able to blow through this thing and destroy everyone that wants these levels to go down. So we have to beware of that. Every bit of movement that we have from the bottom is at risk of doubling. So every bit of profit that's so far being captured can double. And that's if you caught the best price at the bottom as well.